Welcome back. Cisco, the worldwide leader in IT, networking, and security. The company last week reported an impressive beat on both earnings and revenue, $2.6 billion in earnings on revenue of $12.5 billion. It failed to wow investors, though, with the growth outlook. The stock actually traded down initially. Cisco also disclosing it's using repatriated funds to pay down debt, making some analysts wonder if it will have less cash for acquisitions. What does Cisco's business tell us about the broader spending and state of the economy? Joining me right now to help answer that is the chairman and CEO of Cisco, Chuck Robbins. Chuck, it's good to see you.
It's good to see you, Maria.
Thanks so much for joining us.
Well, thanks for having me.
Characterize the quarter for us. What are you seeing based on your vantage point in terms of growth in the economy today?
Well, first of all, we were very pleased with the quarter. We obviously grew 4%, $12.5 billion. We had a record quarter from an EPS perspective. We had a record quarter relative to our capital return to shareholders. We continued to see the acceleration of the product we launched last summer in our core franchises, which is the fastest ramping product in the history of the company.
Wow.
And we continued to see success in our business model transition. So we announced that we have now $5.6 billion in deferred software and subscription business on our balance sheet, up 29%. And a third of our business is now coming from recurring, and we've made a lot of progress. So I was very confident, and the outlook for next quarter shows continued strength and increasing top-line revenue. So overall, we were very pleased.
I want to talk to you more about this shift that you talked a lot about on the call toward recurring revenue. But first, when you look at the overall quarter and business spend right now, you know, corporations have to spend on security, on IT. We know that. But for a lot of years, businesses were sitting on cash because of regulations, because of the broader economic outlook. What are your thoughts in terms of business managers right now? Are they increasing their budgets toward this kind of spend?
Yeah, Maria, I think the big difference is that for the last 2 or 3 decades, IT and technology has been seen as, you know, the responsibility of IT was to enable the strategy that the company sort of rallied around. So the company would build a strategy, and the IT organization built the technology to enable that. And today, things are completely different now. Technology is actually at the heart of every strategy of every company, every city, every country around the world. And so technology is no longer something that I spend when it's convenient. It is at the heart of everything everybody's doing. So I think you're going to see a much more consistent IT spending environment from our customers going forward. And then when you also look at the importance of cybersecurity, as we connect billions and billions of new devices, the entire focus on security continues to increase, which is another area that our customers continue to spend on. So
what's the outlook then? Look out for the rest of the year and into next year.
Well, it feels like right now, notwithstanding some major macro or geopolitical issue, that we're operating in an environment, as you and I talked about in Davos, where there's probably the most consistent optimism around the world when you look at customer segments, you look at geographies, whether it's Europe, the U.S., Asia. You look at emerging countries this past quarter were positive. Now, we also have the corollary. We have the rising dollar, which has impact on emerging countries, and they tend to be more volatile. But I think with the importance of technology, the increase in cyber spending, and the current strength of the global economy, it feels pretty good right now.
You repatriated money from overseas to the U.S. Tell us about that and what you're expecting to use this money for. Of course, you got to work out buybacks and stock dividend increases. Is that right?
Well, we repatriated $67 billion, and we've now completed that, so it's back in the U.S. And what we announced is that our capital allocation strategy wouldn't change, but we would accelerate it. So you saw us last quarter, we announced a dividend increase. Now, that happened to be the quarter where we typically do that on an annual basis, but we had a pretty aggressive dividend increase. We also announced that we were going to increase our share buybacks. And obviously, we continue our M&A strategy that we've deployed for many years. And, you know, our M&A strategy wasn't impacted really by the dollars being overseas because of the debt markets and the access to debt. So we have not, there hasn't been a single deal that we wanted to do that we weren't able to do because of our cash being overseas. But it certainly gives us more flexibility.
What kind of deals would you look at in the coming year, for example? Is it more toward cybersecurity? Is it toward networking? I mean, where are the areas in the business that you'd like to grow from acquisitions?
You know, we would look at anyone that makes sense. And really, the way we think about acquisitions is that we want those that are complementary. They either make our existing franchises stronger, or they help us extend our franchises, or they move us into an adjacency that's very connected to. So if you look at the areas that are really important, it's across the portfolio, but I'll call out security, obviously, and we can talk a little bit more about this architecture that we've built. But obviously, security is a very important priority for our customers, and it would be a very high priority for us from an M&A perspective. Our customers are dealing with, ironically, a more complicated IT world today than they had 5 years ago. And I say ironically because the whole notion of public cloud was going to simplify all of technology. And the reality is, between public cloud and SaaS providers and the explosion of IoT and the continued investments in private data centers, the network actually has to play a more important role than it ever has. So policy and helping our customers navigate this multi-cloud world is another area that's a big one for us.